Hello, welcome back. This is Si Wing Yi, and today is Thursday, 1 December, and coincidentally, I'm going to go over a Redfin article dated, published today, December the 1st, 2022, and the title is Housing Market Update. Home buying demand ticks up as rates continue to decline. Okay, mortgage applications and Redfin Demands Index, a measure of tours and other home buying services, are up as mortgage rates continue to come down. But pending home sales decline and the number of homes on the market increase as buyers took a break over Thanksgiving. By the way, all the data I'm going to show you is, there's a lag time, and like at least a month or 2 months, a lagging indicator. So we will know today November's data until the latter part of December and January. So again, lagging indicator. But right now, also we're moving toward the last quarter of the year. Is all about seasonality. This means as we are approaching the holiday, or we are right in the midst of the holiday, most people that's are not involved in real estate transactions. So it is every year at this time of the year, you will see less transactions on a historical basis. So when we see everything going downward trend, partly due to the seasonality and the time of the year with the real estate transaction. So with that in mind, let's continue with this article by Redfin. Home buying demands have started ticking up as mortgage rates continue their steady decline. Daily rates dipped to 6.29% on December 1, which is today, down a 1 full percentage point from peak of 7.29 1 month ago. Isn't it amazing? A whole 100 basis point reduction in mortgage rate from November the 1st to December the 1st this year, 2022. Consequently, mortgage purchase applications are up 4% from a week ago, and Redfin's home buyer demand index is up about 1.5% from a month ago. So price drops are becoming less common now that the mortgage rates are in the 6.5 range. So sellers are, most of them, more and more of them at least, are getting the memo in that the demand for housing has subsided for most of this year because of the rising interest rate. So they are not putting up their homes too much higher than what the buyer will willing to pay for. So price drops are becoming less and less common, at least for the time being. So here's what the quote by Redfin Deputy Chief Economist Taylor Marr. He or she said, "I'm still trying to find out whether this person is a man or woman. Can somebody drop a comment below my video to determine whether this Redfin economist Taylor Marr is a male or female? I'm always been wondering." Anyway, there has been a handful of pieces of relatively good news for the housing market lately, but we are far from out of the woods. Key indicators of home buying demand will likely be teetering on a knife's edge with every data release that comes out related to the Fed's path to eventually bringing rates down, said Redfin Deputy Chief Economist Taylor Marr. He goes on to say that we're likely past peak inflation, past peak mortgage rates, and past the bottom for mortgage purchase applications. So that's a good sign, right? They are predicting, Redfin economists, that the rates will probably not going to get anything higher than 7%. We'll see. No one have a crystal ball. Everybody have their own opinion, economists or not. So every one of you listen to my video have your own opinion. I get that. But some people are have more knowledge and more background than a lot of us. So whatever, which is fine. But there are further cooling ahead for the housing market. Yes, as sales and prices have further to fall before buyers and sellers become comfortable with buying costs again. And the number of listings, but the month of supply, which is very critical, as you know, 5 to 6 months is a balanced market, 5 to 6 months supply of inventory. Anything less than 5 to 6 months of inventory, that means we have more demand than supply, economics 101. And so therefore, the sellers have an upper hand, and therefore prices should be stabilized or rise because of the demand higher than supply. So the supply of homes are nationwide, at least, are at 4.1 months during the 4 weeks ending November 27th, up sharply from the 4 weeks period prior, since the highest level in May of 2020. So we, at least temporarily, we're seeing more inventory. Does that mean that the sellers are putting their homes up for sale more than before? No. It means that demand has continued to drop due to the buyers not pulling the trigger, due to many buyers, potential buyers, or sitting on the sideline. So, as a matter of fact, most homeowners right now, they're locked in with such a low interest rate, historically speaking, and they have so much equity out of their homes, they are staying put. They have a lock-in effect, if you will. So they have no incentive to sell, especially when they lock in a mortgage of 4 to 3% on a 30-year fixed rate mortgage, and they have so much equity in their home, they're going to stay put until things get better, if they get better. So the supply of homes for sale posted its biggest year-to-year increase on record, even as new listings declined by double digits. So listings, people putting their homes for list has continued to drop month over month throughout the 2022. So interesting. Home prices are falling from a year earlier in 10 of the 50 most populous US metros. This means 20% of the most populous US metros have price drops, whereas 80% of the most populous US metros did not have any price drops. Do you understand what I'm trying to say? So the sky is not falling, not the entire country, which consists of 400 MSA, which is metropolitan statistical areas. So there are many housing markets in many parts of the country, especially the Midwest and the South and Southeast, have not experienced any price drops. Only 20% of the country's of the 50 most populous US metros has price housing reductions. Hopefully, I'm being very, very clear. Real estate is local. There's no such thing as a national real estate market. It's very local, down to the metro, down to the city, down to the neighborhood, down to the block, down to the houses in that particular neighborhood. It's a very, very unique. So the 20% of the most popular metros that are having price drops, some of you already know about it because I've been talking about it for quite a while recently, or mainly in the West Coast, San Francisco, where I live for the past 30-something years, San Jose, Pittsburgh, Pennsylvania, Detroit, Sacramento, Austin. Yes, they have housing price declines in those areas. Chicago, a little bit. San Diego, a little bit of a price drops as Los Angeles and Philadelphia. So it is what it is. That's what Redfin said. So leading leading indicator of home buying activities. So for the week ending December 1st, today, 30-year fixed rate mortgage has tickled down to 6.49%. The daily average dipped to 6.29% on December 1st, down a full percentage point from the peak of 7.29 reached on November the 4th, almost a month ago. Interesting, isn't it? All right, so I'm going to come down to the graph here because the graph, all these details are mentioned on this paragraph. I can pretty much talk about it on this graph. So median sales price are still up year over year as of November 27th from 2021, which is the blue bar, and the red one is 2022. Even though the middle of the year, we have seen quite a substantial appreciation. But since then, since the skyrocketing interest rates, when the housing price has dropped pretty significantly, whereby year over year in November, we're only up 2.4% in price increases nationwide. So this is November 27th. So we still have a little bit more than a month left. But you could make the argument that by December 31st, 2022, the year over year prices from 2021 and the year 2021 to December 31st, 2022, you could make the argument it could be less than 2.4% gain. So if it is 0% gain from year over year, this means all this gain that occurred between the gap between here, all the appreciation between 2021 to 2022, during at least the first half of the year, we see big increases. At the end of the year, we end up to being no increases, no price, no appreciation, at least from a nationwide level. I know every local market is a little bit different, but we're talking the big picture, the high level, all the 400 metros that are being evaluated. All right, so something interesting, right? Median ask price is up 4.8% year over year. All right, so again, median ask price is somewhat similar to the previous graph in terms of median sales price. So I'm not going to talk about this too much. Because the mortgage rate has increased substantially from the beginning of 2022 until now, this dramatic increase from 3.5% interest rate early this year to 6.49% as of November 27 has caused home buyers needing with a 40% increase in mortgage payment on the same purchase price because of the interest rate hike. So that's why many first home buyers are staying in the sideline. They cannot afford this huge jump in mortgage payment as a result of the interest rate hike. Pending sales have been decreasing at 35% year over year from 2022 from 2021. So pending sales, there are less sales out there because sellers, homeowners are not putting their homes up for sale because most of them have a locked in at a historical low interest rate and have substantial amount of equity. They're not going to sell their homes until the interest rate decrease substantially in the next few years, in my opinion. So people are not selling. So we are, in my estimation, the trend is that there'll be less and less supply of homes available moving forward as we're heading to 2023. We're already at a very, very low inventory for years now, ever since the last housing crash in 2008. But because of pending sales and new listings being decreasing throughout this year, causing the supply of inventory to drop, continue to drop, and that could be cause of concern down the road. There's so few homes available for sale moving forward, and if the demand picked up for whatever reason in the foreseeable future, due to maybe an interest rate decreasing, then we may have a housing frenzy, housing frenzy in my mind. So just keep that in mind. New listings of homes are down 21% year over year in 2020. See, look at this. Look at new listings. How much fewer sellers are putting their house on the market throughout the year. Look at the steep drop in 2022 compared to 2021. So we have to watch over this. Active listings, even though active listings have increased 13% year over year, again, because of lack of demand, these active listings homes are not selling, and they're taking longer to sell, and some sellers are perhaps putting their homes off the market again. Okay, 4.1% month of supply available in the market, still are very low, historically speaking, because 5 to 6 months is a balanced market. At 4.1%, it's still a seller's market, but it's better than before, better than a year ago when the supply inventory are extremely low. Back in 2021, as low as like 1 month inventory in certain markets. So right now we're 4.1%. So buyers have more negotiation power because of more homes available, because so many people are priced out of the home purchase market. 32% pending sales when under contract within 2 weeks. So not bad. So we're talking almost 1/3 of all the homes when under contract within 2 weeks. So homes are still selling very nicely. In some local markets, we are seeing a number of multiple offers, 2 or 3, 4 offers per house, depending on the neighborhood, depending on the property and what have you. So home sold in a median of 36 days, not bad. 36 days, that's pretty normal on a historical basis. In fact, on a historical basis, it takes more than 36 days for home to be sold. So home that are priced well accordingly will sell fairly quick. 26% of the homes are sold above the list price. So this means some homes are still getting an offer higher than the final list price, whereas conversely, 74% of the homes are sold at below the final asking price. Okay. 6.3% of listings have price drops, which is a lot less, as you can see. The price drop was very elevated throughout most of the year until recently, for the past 30 days. But the sellers are pricing their houses accordingly. So we're seeing less price drops from the initial listings by the seller. The sellers are finally getting the memo, I guess. Average home sold for 98.4% of final list price. This means what? 1.6% of homes. Most of the homes are sold below 1.6% below the final asking price by the seller. The Redfin Home Buyer Demand Index is minus 20% year over year. The demand has decreased quite substantially as a result of the sudden rise of the interest rate. Okay, and let's look over the Redfin weekly housing data. Let me see any other trends I could see from a nationwide perspective. The new listings has been decreasing right now to 2022 on this black line. The new listings have decreased 21% year over year from 2021, which is the blue line. 21% less new listings year over year. Okay, and again, we're talking around here, the last quarter of each year, you are not going to see too much housing transactions due to the holidays and what have you. That's the new listings. Let's look at active listings. Active listings at the beginning of the year, we have more listings being actively out there in the multiple listing service. However, during the past few months, the active listings has been trending down again, partly because of the seasonality of the housing market, but still listings or less houses coming into the market ever since back in August. That's the active listings. Let me see what else. Medium sales price. Let's look at the entire country. The 400 metros are tracked by Redfin. The medium sales price is at the peak back in the summer, June the 19th, 2022, at a medium sales price of 392, 13% price gain year over year from 2021, which is the orange line. That was in June. Now, as we fast forward to the ending date, November 27th, the median price has decreased to 357. So this means the year over year gain, price gain, November to November of 2021 to 2022, only 2%. So we could make the argument by the end of this year, December 31st, we may not have any gains from year over year from last year. So because the price drops continually. So that's a medium chart. But you have to think of the big picture, right? Ever since 2019, before the pandemic, we have seen some very significant skyrocketing of home prices in many areas. Because the median price back in 2019, look at this, was 260,000. Now the median price is 357,000. So that we're calling double digit, even triple digit appreciation in the past 3 years, month over month, year over year, because we have experienced pandemic housing boom in the past 2.5 years as a result of the historic low interest rate of 3% or lower. So that's the median sales price. Let me see what else that is. Let's go over price drops. We have seen some significant price drops lately. The past 30 days, really. So we'll see how it's trending for toward the beginning or the first quarter of 2023. We'll see how the price drops is trending. All right, let me see. Let's go over the month of supply nationwide. The inventory has increased to 16.3 weeks of supply. You divided by 4 weeks per month. So 4 divided into 16. We're talking a little bit more than 4 months supply inventory. Still somewhat of a seller's market. Still the demand is greater than supply based on this data. Does that make sense? 5 to 6 months is a balanced market. We have not reached 5 to 6 months yet. We have not even reached barely over 4 months. Only time will tell. So still, inventory is fairly low on a historical basis. Anything else I need to go over? I think that's it. I think I'm pretty much done. So hopefully this data helps. This short-term trend of a lowering mortgage rate is enticing some buyers to lock in the lower rate as we speak at the low 6 right now. So there are still buyers out there even during the fourth quarter of 2022 because some people still can afford it. Some people have the motivation to buy and they could afford it, they qualify. So they're not going to wait any longer because oftentimes it's an emotional decision. Sometimes people buy not based on financial savvy. They buy because they really need to buy. They need to buy a place for their own personal reasons. They could afford it. In my opinion, even with the higher interest rate, if as long as they have a long-term perspective, as long as they're going to stay in the house for at least 7 to 10 years, they'll be fine because the housing cycle happens, every now and then. But long-term housing prices will always go up, given a 10-year real estate cycle trajectory. So as long as you have a long-term perspective, stay in your home for the long term, you have a good job stability, and have emergency funds, then who's for me to say people should not buy just because the market is very challenged at this moment. Okay, so that's all I have to say. If you receive a lot of value from this video, please smash the like button and subscribe to my YouTube channel. And finally, feel free to put your email into a newsletter on my website below this video, so you can receive weekly free newsletters on real estate investment opportunity for real estate investors out there, average people like you out there, wherever you're located in the country. You have the ability to become a real estate investor, to buy rental property, to achieve your financial goals. Right? So thank you very much for attending, and I will see you on the next video very shortly. Thank you so much. This is Siwing Yi from the Yi Real Estate Network. Have a nice day. Bye-bye.